Welcome everyone to our first Facebook Live. This is Suzanne Specht from the Florida Small Business Development Center at Florida Gulf Coast University. I'm happy to be here today to assist you in the 5 C's of credit. Now, the Florida SBDC program, specifically here at FGCU, assists small business owners with no-cost consulting, and we have a variety of consultants available across Southwest Florida to assist you. So please feel free to contact us today. My background, and I've been with the program for 20 years, as I was a former banker, and I usually help small business owners that need money, which I think is about probably 99% of small business owners in a variety if you're either starting or if you're growing your business. So I have a specialty in SBA loans, and today we're going to talk about, and if you could actually share this video, that'd be awesome. Today we're going to talk about the 5 C's of credit. Now, small business owners come to my office all day long and they ask, I need to get a small business loan. How do I go about doing that? And I ask them this question, do you know about the 5 C's of credit? And they look at me and say, not so much. They don't know the jargon. So small business owners out there, here are some secrets from a former lender. So when you go in and get a small business loan, you'll have the jargon down correctly from a banking point of view. Okay, so the first C is your credit. Bankers look at your credit bureau and your credit score. They want to loan to people who are going to pay them back, and the best way to see if they're going to pay them back, is by your credit and your character. So they're looking to see how well you repay your debts. Past performance is always a good indicator of future performance. So if you don't know your credit bureau and you don't know your score, I'd recommend for you to go to creditkarma.com or creditreport.com. Take a look at your credit bureau and your score prior to going in and meeting a small business lender. If you want us to take a look at it, we'd be happy to. So credit scores range from 350 to 850, and the higher the score, the better. So probably 670 would be a point where they would, I think lower than that might have some issues. Again, bankers are looking at no to limited risk, so they want to make sure that you pay your loan back. That's the first C. Second C is cash. How much cash are you investing in this business? If you're a startup business, you have to put at least 10 to 20% of your own money in. Bankers want to see that you have some skin in the game. They don't want to finance 100%. They don't do that typically. So they want to make sure you have some sort of investment. Why would they loan to you if you're not putting your own money in? So each bank is different. For a business acquisition, maybe it's 15%. For an SBA Express loan, it might be 10%. If it's buying a building, it might be 20%. It really depends on the type of loan that you're going to be getting. So remember, you have to put some skin in the game. If you don't have any financial resources, I recommend you start saving some money. Borrowed funds is not really a great idea from family or friends. You can start off that way, get yourself established, and then get a small business loan down the road. The third C is cash flow. Banks want to make sure that you're paying your loan back from the cash flow of your operations or your business. So for startups, they're going to look at your cash flow projections. We can help you with that. Typically, they like to see 2 to 3 years worth. They want to see some seasonality. They don't want you to put, say you have $1 million in sales for the year and divide that by 12, and every month you're going to make that much. It doesn't work that way. Small business owner or small business lenders want to make sure that you have some seasonality. Southwest Florida is very seasonal. So depending upon your industry, we can take a look at, say if it's a restaurant, it's definitely slower in the summertime. So you have to show that in your cash flow projections. For existing small business owners, they're going to look at your past performance, usually 3 years worth. So you want to make sure that your tax returns and your financial statements, profit and loss and balance sheet and cash flow statements all jive together. Worst thing that you can have is things don't make sense to the lender, and then everything is kind of suspect. So they want to make sure that you're cash flowing from your operations. You're not putting more money into your business to keep it afloat. And that's very important to make sure that you're cash flowing. The fourth C is going to be collateral. They want to make sure that you have some sort of collateral to put up as a secondary repayment source. Obviously, they want you to repay the loan from the cash flow of your operations or your business. But You want to take a look, they're going to take a look at your personal financial statement, your balance sheet, to see if you have any collateral to secure the loan. Could be equity in your house, could be the piece of equipment you're buying, it could be not your firstborn. They don't usually take firstborn. I had a lady put that on her loan application one time. Thinking, nah, I can't really use that as collateral. But they're going to take a look at every asset you have, including personal assets. If you're buying a piece of equipment, they'll probably take that as collateral. They don't want to repo it. They don't want to foreclose on it. With the SBA, the Small Business Administration, they do get perhaps a guarantee if it's an SBA loan. So that kind of mitigates a little bit of the risk that a small business lender might have. But they are looking to see if you have any other repayment sources as well. The last C is going to be conditions. That's going to be the economic conditions. Back in the recession, banks were very tight on loaning money to small business owners, specifically the construction industry. But now, with things much improved, we see a lot of lending available, and small business owners are kind of going out of their way to make sure that the access to capital is there. So the 5 C's: credit bureau, credit score, the cash that you're putting into the business, the cash flow from your operations, collateral, and the conditions. And also with conditions, they want to make sure you have experience in the industry that you're in. They'll take a look at your industry and see if it's an industry that's growing or declining. So you just make sure you're in an industry that hopefully is growing. So that pretty much sums up the 5 C's of credit. Very important for you to know that as a small business owner. Let's see if there's any questions out there. We're happy to take questions. I'm going to put my glasses on and see if we have any questions. Julio says hello. Hi, Julio. How are you? Just waiting to see if there's any other questions that might be out there for our small business owners. And again, the Small Business Development Center is here to assist you. We have other types of consultants available. We have a couple other bankers here on board. We do have social media consultants. We have technology, international trade, federal contracting, strategic planning, branding. So for those existing small business owners, we have a variety of really good programs for you to help you grow your business. Okay, first question is, how does my personal credit mix with my business credit? Okay, very good question. Usually a small business loan, the bank is going to look at your personal credit first. That personal credit needs to be pretty good for them to consider a small business loan. Business credit, you could establish your business credit, but they're going to really take a look at your personal credit first and foremost. In a small business loan, you have to personally guarantee that loan. So that's why they're looking to see that you have your personal credit in order. Any other questions that we might have out there? Very good question, Julio. Okay, I don't think there's any more questions that are out there, but we're here to assist you. So please feel free to contact the Small Business Development Center. Our phone number is 239-745-3700. Or you can like our Facebook page. You'll get some great information from our Facebook page. Or visit us online at fsbdcswfl.org. Again, we're here to assist small business owners, so please feel free to contact us. And thank you for joining us today for our first Facebook Live. Have a great day.